It's Bank of America Chairman and CEO Brian Moynihan. Brian, I always love your take. You've got more sense of the consumer and the country than anybody. Your stock has held up far better than any of the other major banks. Tell us what you're seeing, and tell us what would happen if you got the 7 rate hikes that some people are talking about.
Well, Jim, good to see you. And, I think when you look at the core spending levels of consumers, they continue to be very strong. So we went out a week or so ago and said January is up, nearly 15 to 20%. We're seeing that continue into February. And despite what you just said, restaurant spending is up, which as it starts to normalize. So we're seeing consumer spend across the board. So number one, consumers are spending. The money moving out of their accounts, which is a lot of money at Bank of America over the course of a year, $3.5–4 trillion, is growing at 15% in February so far and grew up faster than that in January. The good news is the transaction volumes are up. So this isn't all inflation driven, which might be the question. The second thing is that consumers have more money in their accounts. So the month of January, their accounts grew again, especially for consumers that carry lower balances. That sort of belies the question of, well, when stimulus runs out, people are going to drain their accounts. They haven't yet. They've gone up for the last 6 or 7 months, so that's good for the economy. But also that means that the economy is very strong. It's predicted to go 3.5–4%, so the Fed's going to have to slow it down and bring the rate structure back up to where it was in 19 when the economy was basically about the same size as it is now.
But let's go to what you've done, which you've done a remarkable job hiring people and had to pay more. If we slow the economy down, yeah, it's terrific for maybe employers not wanting to pay as much. But you've got a situation at your bank right now that frankly, if it weren't, I'm just going to say it, it's the greatest time ever for your bank. And I hate to see that be taken away by the Fed.
Well, I don't think the Fed will take it away. We make a little more money in rising rates because the core deposit franchise we have has so much embedded value, and the rate structure comes down, it hits the zero floor because we pay zero, but we can't pay less than zero. So that's good news. But when you think about what we've done to be a great place to work, Jim, in terms of our teammates, we've continued to work this company. When I became CEO, now 12-plus years ago, we had 280,000 people. We went up to 305,000. We're running about 208,000 people. And that is by just applying technology over and over and getting more and more effective and efficient across all those time periods. And as you said earlier, and Brian said it, others, you had to be doing this all the time. The pandemic, we had a lot of work to do to help our clients through, but you had to keep investing in technology that would provide efficiencies and effectiveness going forward. And that's how you run the company, and that's why when rates go up and the economy slows down, we can still make a good amount of money.
All right, that's good because you do have the 14 multiple, which is the highest multiple in the majors. Before I turn it over to Carl, I'm going to drill down more on the technology spend. You have said over and over to me, listen, we have to spend the technology. We have to spend $10 billion a year in technology, including new development, or else we'll fall behind. Well, what I have seen this quarter was that everybody fell behind. This was the breakout quarter for all the money you spent on tech. And you know what I'm talking about. There are other banks that just realized, holy cow, we're way behind. How did you see it? How did you know it, and what has it done?
Well, we had great leadership. Kathy Bassano led that for years, and now is over in Paris working on some stuff for us. Aditya Bassi now runs a tech and his colleagues. But it was driven by our businesses saying, hey, we've got to transform this business. And the starkest thing would be to think about our consumer business. Had about 6,000 branches in at the high point, now has 4,000, and the business is probably 3 times bigger. And the headcount went from 100-some thousand down to about 60,000. So just think about that term. But it wasn't one silver bullet. It was a constant, the implementation of the digital banking and pushing mobile banking, getting mobile banking implemented by the customers, showing them how easy it was. Then you did things like Zelle and Erica and Life Plans, and you just keep building this. And so people are critically important to our execution at the branches. We're a high-touch, high-tech. But the reality is they can be working on the most important things as clients. Well, the technology can take care of things that can be done, simplistically by the customer easily. And so checks, deposited at the branch have gone down to like 15% from half 10 years ago. And think of everyone that's costing a lot more money than a client doing it digitally or through the ATM.